How's my hair?
I'd say strong to quite strong.
When I put too much product in it, you can see how thin it's gotten over the years. I got to do like less, or I got to put the product in when it's dry already. So it's not, right? You're not so worried about this?
I cut my head pretty bad with a razor the other day. I don't know why. Usually I'm like pretty quick. I'm like, and for reasons that are unknown to me, I decided to like press and see what happened if I like pressed it, and I took a chunk out of my scalp.
You effed around and found out?
I really did. It was so dumb. As soon as I did, I was like, what an idiot.
Hey, everybody. It's an all-new edition of What Are Your Thoughts? My name is Downtown Josh Brown. With me, as always, my co-host, Michael Batnick. Michael, say hello.
Hey, guys.
All right. Guys, this is your new, if you're new to the show, this is your new favorite stock market / economy / business weekly update.
Finance?
Yeah. This is going to be your new thing. You don't know it yet, but you will by the end. For those of you regular viewers who are joining us again, thank you so much. I'm in the live chat right now. I see Dr. Horton is back, Jay Luther, Georgie D, Jack C, Stock Market Mike. What's happening, Mike? Roger's here, Magnus. I'd say hello to everyone, but we'd be here all night. We love you guys. Thank you for coming for the live. Much appreciated. I want to mention that we are sponsored tonight by best sponsor in the world, our friends at WAYT Charts. Michael, what's going on at WAYT Charts these days?
Best sponsor, I think our first sponsor.
Yeah.
It is the tab that I have open most on my computer on a given day. So there is something.
Not to brag, I have 3 WAYT Charts tabs open right now.
Okay.
So.
I have 6. They built a transition analysis tool for advisors. So when we get portfolios, assuming they're taxable, there's gains. It's a strong market. And so what we can't do is just rip out what they've done and put our models in. So WAYT Charts created this just for you. If you're a new listener or a new subscriber to the show and a new subscriber to WAYT Charts, and a listener to this here show, tell them we sent you. You'll get 20% off your initial subscription, and I cannot recommend them strongly enough.
You're going to go to go.waycharts.com/compound and learn more and let them know that you came from us. All right. I have like a topic 1A tonight. It's not an official, but we have to at least just acknowledge what's going on. Roaring Kitty is back. I think it's the big news of the week, or at least it will be until the jobs report on Friday. I don't know unless something else crazy happens. This is kind of crazy. So just to recap from people that aren't spending tons of time on day-to-day market stuff, Roaring Kitty just disclosed a massive long position, I think by way of options and stock in GameStop. The stock gapped higher like 100% on Monday morning. It's since faded. It's still up from where he tweeted out this screenshot of his holdings. He's doing these trades on E-Trade, which is owned by Morgan Stanley. There's chatter. It looks like it was leaked to our friend Gunjan at the Journal that there were internal debates at Morgan Stanley. Should we shut this kid Keith Gill down, not let him use our platform for this type of trading, given that regulators are now, looking at it. But they also don't want the ire of the meme stock crowd to turn on them. So they're almost damned if they do, damned if they don't. My opinion here is the only reason somebody at E-Trade or Morgan Stanley leaks this to Gunjan Banerjee at the Journal is because what they really want is for the for the SEC to step in and shut this down so that Morgan Stanley doesn't have to become the next target of the GameStop crowd. Michael, what are your thoughts on all this?
Yeah, I think what you just said is 100% accurate. I won't rehash what you said because I think it's right. I agree with everything you said.
Yeah.
What I'm curious to see is a couple things. One, when does he close out his position? A lot of this is leverage with options, and there's massive time decay, so time is of the essence here, and I think he laddered them out. Bought some weeklies, this beautiful maniac.
But does he need this to keep going in the short term to preserve the money that he's made so far, because a lot of this is options?
I'd say depending on when these expire, certainly. The other thing that there's debate around, well, there's 2 things. Number one, where did all of this money come from? So, yeah, he made a fortune in the last meme cycle, but I think there's almost $200 million on the line. So there's speculation that, wait a minute, did he like raise a fund to do this? Like, and if so, who in the world is giving him money? So there's one debate there. Do you have any thoughts there? This isn't all his money. It's too much.
So I read an article where some of the short sellers who like obviously have a horse in the race and obviously have a bias are speculating that somebody is helping fund this kind of activity. If that's true and that somebody gets found out and they work in the industry, they're in a lot of trouble. Because the thing that I think is keeping Keith safe from a regulatory perspective is that he is not advising anyone else what to do. Even though he's like playfully doing Uno cards and whatever, he knows the impact that he has. You can't say that there's any evidence that he's instructing other people to act. And I think that's where it crosses over into manipulation. He's doing this with his own money. This is why I think he should be left alone.
Oh, I
he's
agree.
Doing
Okay,
this,
go ahead.
Okay, he's doing this with his own money, number one, we think. And number two, he's not telling anybody else what to do. And I don't think he's lying. He's saying, this is what I own, right, and other people are choosing to react. So
that's not
is
illegal.
there free speech in America? Yeah. Yes.
Right.
Are these adults using their own money to copy him? Anyone's head. So I think let this kid do what he wants to do. But if the wrinkle is that he's a puppet and there are more powerful forces who are different, utilizing him for manipulation, I would say that might make it different.
So Citron Research, I don't even want to. I believe they have a short position.
Andy left. Yeah, I don't know why he's back to this shit again.
So he tweeted, for the record, I don't think anything Kitty did was illegal, because there's like people saying, like, is he going to go to jail? However, I believe he and his associates overstate their importance in the market and overlook the market dynamics and structure of GameStop.
He's not stating anything.
This is interesting. He said back then he bought the stock at $2 when it had 100% short interest, and there was still hope to turn the business around. Now he's buying the stock at 80, split adjusted, with low short interest and a failed business model. If investors want to buy GameStop, they should be allowed. The risks are well known, and these are free capital markets. Assuming Kitty does not have material non-public information, he has the right to make a large bet and tell everyone he cannot predict the reaction.
Andrew Left has it backwards. He's wrong. It's in better shape now than it was then. They raised $2 billion selling shares to meme people.
But that's his point. In other words...
No, it's not his point. He's saying it's the opposite.
No.
He's saying it's a failed business model. I think they make money now. I think it's profitable. That's one. Two,
but I think he's saying
the balance sheet is better now.
The first time there was so much short interest, and there was plausibility that there could be a turnaround story, and that double juiced the stock higher. Now, the fact that it is a decent business, it's not going to 10x again, or whatever X it did. I think that's his point.
Well, look, I have no idea what will happen, but I'm on record saying the sequel is never as good as the original. I think the events this week bear that out, because if he had tweeted out a screenshot of his current dollar amount invested in this in 2021 with this dollar amount, the stock would go to 1,000.
It would have been bigger than Apple.
Right. So the fact that the most we got was a $40-something print pre-market, and it's been down ever since, tells me that the sequel is not as good as the original.
Totally agree.
All right. I don't want to spend more time on this. I do think it's likely that Morgan Stanley / E-Trade is going to be forced to do something here. The Massachusetts regulator Massachusetts has the most rigorous stock market regulator of all the 50 states. I don't know what Massachusetts has to do with this other than they have residents who are trading the stock, so they could just like claim, we have to take a look at this. But that's Elizabeth Warren's state, and we know she's not a fan of these shenanigans. So
I would guess nothing happens.
I would not. I would guess the opposite. I would guess full-blown investigation into who is loading up on options trades. Was it just Keith Gill? Were there other people involved? Was there international money? Were there hedge funds? They have to be combing through this stuff right now as we speak. There's no possible way that they're not. And
I'm just saying,
rare.
I don't think action happens in terms of people not being able to trade or E-Trade having to do anything. That's what I mean.
Oh, you don't think they'll force him to leave the platform?
No.
Okay, $50 bet?
Sure.
Okay, I think it happens by Friday. So I'll put a time frame on it, and if
Friday.
it happens later, I won't say I was right.
I feel like you need odds.
No. We'll
Okay.
time it. We'll put a time
All right.
frame on it.
All right, deal.
I would say by the end of the week, there's news that he has to move his money somewhere.
Do you take GameStop?
Dude, you're talking about Morgan Stanley. You're talking about literally the most risk-averse investment bank on the street. I think they want nothing to do with this stuff. It's not about how much money they have. The only thing they don't want is to have the cannons turned on them. Like, if there's a way out for them where they don't look like the bad guys that shut Roaring Kitty down, they're going to take it. So I think that lifeline is coming in the form of some sort of regulatory thing. I mean, I'm making things up. I don't know anything, but that's my guess.
All right.
All right.
Speaking of making things up, let's talk about India.
India is the most fascinating situation. I was excited to talk about it over the weekend, and then today things really got interesting. So India is important in that it's one of the best international stock markets in the world in recent years. It is the best of the large emerging markets. And I want you guys to understand that this is not only a fast-growing stock market, but a fast-growing economy, a rapidly developing country. And since Modi became the prime minister 10 years ago, this stock exchange, the National Stock Exchange of India, the NSE, became larger than the Shenzhen Stock Exchange, larger than the Hong Kong Exchange. It is now the 6th largest stock market in the world. And I think it's on its way to 5 or 4, at the current rate. A lot of the reason for the stock hitting a record high yesterday got unwound today. And that's what I want to talk about with you, Michael. How close are you following this, by the way? At all or just a little bit?
No,
not much.
Really at all.
All right. Let's put up this Bloomberg chart. These were the headlines yesterday. The reason why people were so excited about India, in addition to the fact that it's got a fast-growing GDP and its companies are doing great, is that Narendra Modi was about to win a supermajority for his 3rd term as PM. And the supermajority allows him to continue his business-friendly reforms at a rapid pace. Chart off, meaning he will not need a coalition government. His party, the BJP, was going to have this huge majority, like Trump in 2017, where it was just like, this guy's going to come do whatever he wants. The stock market likes that. It's different than the United States, where we like gridlock. In India, the investor class likes business-friendly, stock market-friendly reforms, and that's what Modi was promising. Today, now that we have the real polls and not the exit polls where people were saying who they voted for, today, reports coming in from all over the country were that not only is he not getting a supermajority, although he still wins, his lead is so slim that he's going to have to do all kinds of compromises with all different parties all over India. This Sensex fell 4,000 fucking points on this news, wiped out almost the entire year-to-date gain for the Indian stock market. Let's do this next chart. This is the Nifty 50 ETF. John, do we have this? Okay. I just threw this in at the last minute, but you could see this is a 6% sell-off after these polls came back and showed that Modi is really not going to be able to carry out the rest of his reforms without doing a lot of
back. Whew. I thought it was just me. Are we in the stream? We're streaming?
There's
We're live.
Michael.
All right, let's keep going. Fuck it. We'll do it live. All right.
All right, that was cool. We're back. All right. Anyway, long story short, this is one of the wilder days we've seen for an individual EM market. Even China at its most volatile, it was kind of like a steady drip down and kind of a steady rally back up. This is the sixth largest stock market in the world, making huge intraday and multi-day, going from record highs to a massive 6% one-day crash. What are your thoughts?
Yeah. So a few things. This was the largest election ever. 600 million people voted, which is wild.
Right? Oh,
600 million. So listen, I won't pretend to know anything about Indian politics or the Indian stock market, but this has.
You like Indian food? You do.
I love Indian food. I had it last week.
Yeah.
This is one of the most powerful uptrends on planet Earth in terms of stock markets. So I don't see one day changing a trend. I see that the U.S. ETFs, which trade after the hours that India is closed at the highs of the day, which whatever, it's one day, who knows? So I don't know that this. In other words, knowing nothing, I would be a buyer.
That's
knowing nothing.
So
I would
that's
take
what I'm
advantage
asking.
of the
I think this is a buyable dip. It's politics. Like we buy
Right.
dips on politics.
Politics is bullshit. And also, it's not like he's not in office, right? So there's going to be like a fundamental change to the way that business is run. And again,
Right,
I
no.
don't know anything about their economy or their politics, but just given what we just said, that if like politics is the noisiest noise out of anything. So to me, this is not a change in trend. I buy this.
You know what I would say also is like if you're in the opposition party, I know there's like multiple parties in India. It's not like Republicans versus Democrats. If you're in one of these other parties that now has to form a coalition government, you look at this stock market reaction, that should like tell you, hey, maybe get in line a little bit. This is what the investor class wants. This is what like your economy wants. Maybe play ball a little bit. Maybe don't be so oppositional. Let me show you some ETFs. There's two major ETFs here. This is the first one, INDA. This is the iShares MSCI India ETF. Had Sean dig into these a little bit. 85% of this is Indian stocks, but does not have small caps. So it's a market cap weighted index. This is your large cap India exposure. Okay. So the Nifty 50, which is their index they have two index. They have the Sensex, which is I think 30 stocks, and then the Nifty 50 is more like their Nasdaq maybe. Or their S&P 500.
Maybe.
I don't know. Anyway, EPI is the one I know better. So this is the Wisdom Tree built and earnings-driven India ETF, which screens out some of the more speculative stuff. You have to be profitable to make it into the EPI. Pretty sure the EPI has a higher dividend. It's got according to Sean, it's got a stronger value tilt. The top 10 holdings hold on one sec. Here,
Hold on,
let's
what's
look
that?
at let's look at the technicals here.
Look at that
Just
uptrend.
really-
It's pretty flawless.
Yeah, so this looks like it's going to be a 1 or 2 day event, and I want to be in trends that look like this. I could be wrong, but look how oversold it got in just one day. It went from extreme overbought to almost extreme oversold in a single day.
Well, also, I mean, just the demographic tailwinds that this country is enjoying. And there's some crazy stats out there. I don't know, have any off the top of my head, sorry, but does not change with the leader of the country having less of a grip on everything that's going on.
Yeah, one more thing. Year-to-date net flows into these two ETFs. INDA took in $1.7 billion.
Wow.
EPI took in $448 million. Total return since inception on these funds. INDA looks like it's back to late 2012, early 2013, up 121% total return. EPI up about 112%, but remember, there's a value tilt there, so maybe it didn't own as much tech. And then looks like Chart Kid Matt made us something cool. Let's put this India stock market performance chart up. So this is the Sensex versus the Nifty 50. You see they basically end up in the same place.
Oh, look, it's the same thing. Okay.
Yeah. So this is 10 years. But these stocks have done these indices have done really well. They basically tripled, more than tripled. Let's put up the 5-year total return. This is India versus emerging market. No. Here we go. This is India versus all of emerging markets. Total return over 5 years. You could see INDA is up 53% versus total EM, which is up only 21. Last one is we have some big Indian stocks. This is the top 10 companies in the Nifty 50 by market cap. Do you know any of these?
No, I feel like we're this is like getting to JC territory. Nobody cares. No offense.
Okay. Too many names? All right.
Just enough.
Anyway, I think that this is sort of becoming a hot trade, though, amongst hedge funds, amongst asset allocators, and I could see this trend reversing back higher, and these stocks continuing to move because I looked at like valuation, et cetera. It doesn't. This is not like a Japan 1989 situation or a Nasdaq 2000. That's not what's going on here. These companies are just doing well, so worth following.
All right, let's talk about what has previously been one of the hottest industry groups in the United States, around the world, the software. There was, I was about to call it a blog post. It was a fucking Google Doc. It was a Google Doc that went mega viral, got millions and millions of impressions. You had major CEOs commenting on it, and it was short. It was probably 500 words. And I think it was called The End of Software, or something like that. The End of Software. And this by this guy, Chris Paik, who is a venture capitalist in New York City. I don't know really anything about him or his company, but he made the comparison. You know what? Let me just quote him. He said, Vogue wasn't replaced by another fashion media company. It was replaced by 10,000 influencers. Salesforce will not be replaced by another monolithic CRM. It will be replaced by a constellation of things that dynamically serve the same intent and pain points. Software companies will be replaced the same way media companies were, giving rise to a new set of platforms that control distribution. SaaS, AOR, magic numbers, these are all shorthand to understand the old business model, the old model of business building and software, one where the expense associated with creating software was a moat. The invisible hand has been stayed in software for a long time, but LLMs will usher in its swift, familiar corrective force. Majoring in computer science today will be like majoring in journalism in the late 90s.
So I feel like this was a really well-written piece that could end up being really, really wrong. But the point is really interesting. He's making this comparison to media where all of a sudden the cost of making media went to zero. You have millions of kids that are willing to film themselves dancing or modeling or slam dunking basketballs or skateboarding off of the roofs of buildings. And it's free content. People upload it themselves. You no longer have to pay somebody to entertain. And he's saying, like, with AI, you're going to see software just be created for free amongst people that have their own uses for it, and they're just uploading it, and there's just, like, all these different software tools that people can grab, and they don't need Salesforce to sell them a license. All right. I mean, I suppose that's one way things could turn out, but I just disagree with the premise that there are no media companies. Vogue might not matter, but Netflix fucking does. Like, I think it's just the media companies that are important now are the ones that got really good at distribution.
Well, and guess what? The media companies today, and there's not as many, but in terms of their dominance and their market cap, they're multiples bigger than the entire industry used to be before the internet.
Yeah, I think it would be wrong to look at individual channels on TV or individual magazines disappearing and saying that, like, quote, the media disappeared. It's just evolved. So look, there is a really strong point here, which is that Google has no cost of content creation with YouTube. YouTube is just open for business, This content and everything else people are watching is free because somebody is creating it. And I grasp that point. Could there be somebody offering open source software or open source code that other people could grab and nobody pays for it? I think so. The strongest point he makes is that software coders make a lot of money because they're interpreters. They interpret human ideas and desires into computer code and vice versa. And if I could just talk to AI and tell it what I want my computer to do in English, and the AI will translate that into code, yes, you will disintermediate some
Is that
SaaS
ever going to
companies.
happen? Where you could like literally in plain English be like, "Hey, do this." I don't know. We'll see. Obviously, who knows?
It's happening
So,
now.
To
It's
the
happening
last,
now.
but for people, but you still need to know stuff.
I don't think you could start a software company not
Right,
knowing
right.
anything, but you could definitely give commands to your phone. You do it with Siri every day.
Sure.
Well, you might not, but
Right. So the last point, which was provocative, he said majoring in computer science today will be like majoring in journalism in the late 90s. Somebody replied, Andrew Coate replied, "This is like saying the printing press eliminated the need to learn to write well." Buco
yeah,
Capital, Buco Capital,
Yeah.
who is one of the best on Twitter, quote tweeted it and said, "VCs are posting Google Docs about the death of software. Must be close to the bottom." So to that point, software has had a rough year. Just the stocks. Salesforce got bombed the other day. I think I saw a crazy stat. Its first revenue miss in like, I don't know, 20 years or something astronomical. So we had Chart Kid pull some of this data from Y charts and make a really nifty chart. Throw this up, please. So what we're looking at, the circles, the average stock. There we go. All right. So we're looking at these on the x-axis. You have the ranked year-to-date returns on average for different industry groups, and on the y-axis you have the return. And the size of the bubble is the size of the industry group. So software, as you could see, it's down 5%. I think the average stock, 60% of stocks within software are negative year-to-date. John, next chart, please. So this just zoomed in on that circle, and it's the same style chart, just now we're looking at the individual components. So again, 60% of these stocks are negative year-to-date.
Remember I pitched this thing AppLovin to you? Remember that?
Oh, you did? What's the ticker?
It's the best performing stock in the group this year.
What's the ticker?
It might be APP.
Let me ask. Oh, it's APP. Let me ask Y charts. Yeah, there it is.
Don't feel
still
bad.
looks great.
I didn't buy it either. Don't feel bad.
Still looks great. John, chart back on. So, but you've got some massive companies. Now, if we looked at this just in terms of like drawdown instead of year-to-date return, these companies are well off the highs. So, Salesforce, yeah, it's down 11% year-to-date, but the drawdown is way nastier. Adobe, like these are monster stocks with real big losses. So, to Buko's point, when you got VCs talking about like this, maybe there's an opportunity. Who knows?
Well, I would just point out that these stocks that are down an average of 5% this year were probably up an average of 30 or 40% last year.
Salesforce had a monster year last year.
Yeah, I would also say like what Benioff at Salesforce said was nothing totally alarming. It's surprising because of how good they are normally at beating their own expectations that they themselves set out. And what he said was that things are taking longer. Sales cycle is taking longer to cycle through to the close. People are pushing decisions off. That makes sense. I think we're seeing versions of that all over the economy. But can I kind of throw two things out at you? There is a obvious priority on tech spend right now toward AI. And unfortunately, that just doesn't include most of the companies that are those software company bubbles. It's a narrower area that companies are focused on spending. That's one. Two, there is a priority area of spending that is becoming more of a priority every day, and that is cyber. And by the way, as we're talking, CrowdStrike is up 20 points post-close because they just smoked their earnings, 63% growth to 93 cents a share. Revenue rose 33% to $921 million. If you ask most Fortune 500 companies where they're not slowing their spending or where sales cycles are not being extended, it's with CrowdStrike. Full disclosure, I own the stock. So I think it's not like a yes software or no software. I think priority 1 is AI because nobody wants to get fired or be left behind. Priority 2 is cyber because there's not a day that goes by where another gigantic healthcare company or Ticketmaster or somebody doesn't announce a massive hack. And so if I'm investing in software companies right now, I want something in one of those 2 areas. That's that's where I want to be.
Maybe the opportunity is too much money comes out of software because companies aren't spending as much on it and investors are chasing AI. But if that trend loses steam, that's a segue, then maybe money comes back into software next year.
Yeah, a lot of this stuff is dependent on there at some point being a return on investment in AI. All right, so Chris Mims wrote about the AI revolution is already losing steam in the Wall Street Journal over the weekend. I think the point that he's trying to make is that the rate of improvement in these large language models and in ChatGPT and Gemini, it's already slowing down relative to the rate of improvement a year ago. Is that what you got from it?
Yeah. The headline did not match the reality of this article, but that's not his fault.
Right. So he's not saying people are spending less money, or he's not saying like people are giving up on AI. It just seems that way from the headline. But he is making a different, interesting point, which is that we may have seen the fastest rate of performance improvement of these tools that we'll ever see going forward, which I don't necessarily think is a negative. It just means that they've already gotten pretty good.
Well, the 0 to 1 moment happened really quickly, at least in terms of the public's perception of it, right? We got it in November. It didn't exist in October. Here it is, and it's pretty cool. And I think to Chris's point, the launch, things haven't gotten that much better since the launch. She also made another point, which has been made several times, that the company spent whatever the number was, $60 billion on these chips last year, and they only saw $3 billion of incremental revenue. So, and then also OpenAI at a $90 billion valuation and only $2 billion of revenue. Like, yeah, we know these stocks are expensive.
So these are 2 other things that he brought up, which I do think are more interesting than the rate of improvement point. He says a mature technology is one where everyone knows how to build it. Absent profound breakthroughs, which become exceedingly rare, no one has an edge in performance. So he's saying the commoditization of AI is already a thing. So if you're out there building an LLM to be the next Anthropic or the next OpenAI, you're probably lighting money on fire at this point. And he mentions a couple of startups already selling themselves. The CEO of Stability AI, which built Stable Diffusion, which a lot of people were using. It's like an image program. Left his own company already. Inflection AI, they already left and went to Microsoft. So like, there's already this thing where it's like too expensive to keep building at the rate that this stuff costs and then keep it running for these to be venture backed for much longer.
Right.
So I thought that was a strong point too. I like that because my big bet this year is Amazon, which I just doubled my position in. Like, I feel like the incumbents now are gonna be the way to really play this more so than the startups.
Let me ask you this: the image of Jensen Huang today. John, throw this up if we have it. I
do this when I'm leaving the New York Stock Exchange. Like, you'll frequently
right. So
see
for
young
listeners,
ladies come running up
for
to
listeners, not viewers, Jensen Huang is signing. The CEO, founder of NVIDIA. He's signing a woman holding up her shirt. He's signing her bra. Come on, man. It's time to sell. In fact,
this is how you know it's going higher, because that should be the top.
Fine. Is this the tippy top? I don't know, but come on, man. Come to your senses.
It's too much. It's that. I mean, are we sure this happened? This is not AI?
It's almost too on the nose for a top.
Like, if I told a large language model, show me a photograph
of the top
that would convince other traders that NVIDIA has peaked, it might come up with the CEO of NVIDIA signing a woman's chest.
I mean,
like, that might be the image that an AI would come up with.
Yeah, it's so I don't usually talk like this, but this is it. We're here. I don't know if it's in a year from now or whatever, but like we're close. Sorry.
Yeah, I don't like it. All
Yeah,
right, go
nothing
ahead.
to like here. All right, market breadth. Maybe so bad it's actually good. So let's start with this chart. People were using this chart, at least Bank of America. There was a Bank of America chart floating around showing this. This is the equal weighted version of the S&P 500 divided by the cap weighted version. And as you can see, it is at a decade and a half low, more than that, 2009. Okay. So it's a long time, 15 years. But this chart can be misleading because it's not like the average stock is getting smoked. Next chart, please. So the top pane is a cap weighted version. The bottom is the equal weight. And I think one's up 11 and the other's up 4%. So would I be concerned, chart off, please. We've said this, we've made this point a million times, but I'm just going to keep repeating it until things change. I would be very concerned about the first chart if the equal weight was actually crashing and it was just NVIDIA and Apple and Microsoft holding up everything else. That's just not happening. So yeah, the mega caps continue to kick the shit out of the average stock, but that's a trend that's been in place for 15 years.
Can we go back to the first chart? So these are all large caps. There's no right? This is not like it's not like
yeah, the smallest
Russell
company
1000
in here. The smallest company in here is a couple
3000.
billion.
Right.
Correct.
All right. I don't know. Utilities are the best performing sector this year, better than tech. Do you know that? Is that a tech bubble? My take on this is one more time with this first chart. If I overlaid this on top of the actual S&P 500 since 2004, you would understand that this doesn't matter. Who gives a shit what stocks are if market cap is beating equal weight? What is that a signal? If you own an equal weight portfolio, sucks for you. Market cap over time is almost definitely going to win. Why would you equal weight? Why would you want to have as much of the weakest stocks as you have of the best stocks?
Right.
So this has never. I like internals. I think there are trading signals in internals when you get
that's not
really
internals.
big washouts.
That's not internals.
That's not internals.
It's just
that's
not.
Right.
So Bespoke did great work on internals. This is from Luke Howe at Sherwood. So heading into Thursday, John, chart off for a sec because this is just distracting. So heading into Thursday, the 10-day market breadth. So they're looking at the number of stocks advancing minus stocks that are declining. So the 10-day market breadth, so short term, but still, the 10-day market breadth was in the bottom 10% of readings going back to 2002. But actually, here's a quote from Bespoke. Low breadth readings, the bottom decile, actually lead to stronger forward returns as upside mean reversion typically occurs. The bottom decile, where breadth currently sits, is the strongest performing decile of the bunch across the next day, week, month. So here we go, chart on. So look at this. So look at 3 months, 6 months, 1 year. Again, from green to light green, dark green to light green, it's going from the worst breadth readings to the highest. And the highest is when everything's working. So actually, this is like a bullish washout. This is not a bad thing.
That's that right. This is the rubber band being pulled back as far as it goes. This is not where you get bearish. This is where you play for a spring back in all the stocks that have been lagging.
Yeah.
All right.
So
I like
I'm not saying get super bullish at all-time highs, but I'm also saying there's no reason to be alarmed.
Okay. Jamie Dimon and Mark Rowan were at the same conference last week, and they weren't debating on stage or anything like that. I think Dimon might have spoken the day before or earlier the morning. But Dimon has been, I don't want to say ringing the alarm on private credit, but just trying to be publicly skeptical enough so that when it all blows up, he could say, "I told you so." He seems to be trying to continue to play the role of Jamie Dimon, which is to say things are good, but there are things that I worry about. And private credit is the thing that has become a recurring. Private credit has taken a lot of business that banks used to do. Some would argue there were regulatory reasons why there was this opportunity for private credit funds to slide in where banks would no longer make loans. But then Mark Rowan, who is the CEO of Apollo, which is one of the best performing stocks of the year, it looks like, in the financial services space, took on Dimon's private credit comments and defended his industry. And seems like we now have a good guy and a bad guy, depending on whether or not you work in private credit to root for. I don't know. What do you think?
What I think is I'm so happy I went to the source and I listened to the call. So let's flex for Quarter, please. A company that we invested in. Chart on, please. So at the Quarter app, I get to look at the AllianceBernstein Strategic Decisions Conference 2024, which was yesterday. I'm sorry, it was not yesterday. It was May 29th, where the headline about there being hell to pay was pulled from, and that was the headline because he did say it. But chart off the context. He was not saying anything really negative.
Was
and
not
the hell
predicting
to
a blow up. He was saying there were going to be bad actors in private credit.
He's saying like there are some bad players, but what's really happening is he's talking his book. He wants in. He wants in. So he said, we've seen a whole bunch of dealers go from private markets to the syndicated market. You know why? It's 200 basis points cheaper. So we're going to compete. We can do direct lending off our balance sheet. We can do direct lending and syndicate it. So we're in the mix, and we haven't yet. A lot of these people raise these big funds and stuff like that. We haven't done that yet. So we're comfortable we can compete. Chart off. And then an analyst asks a question, and he just steamrolls him. He goes, oh, and by the way, with our balance sheet and capital, we could put $100 billion into it, $200 billion. But I'm not afraid about it if you think it's good credit. So chart off. So this is hilarious. It wasn't alarmist at all. He's saying like, how the fuck are we not here?
No. Yeah, but I also think that there's a component to what he's saying or the subtext to what he's saying is like, look at the size of us and look how good we are at risk management. You're going to tell me these 700 hedge funds that just started in the last 3 years are doing the types of due diligence that we're doing? Bullshit.
Totally.
So that's one of his points.
Totally.
And he said this about fintechs a few years ago. People were worried about JP Morgan being competed out of business by fucking Chime. You know what I mean? And he's like, look, when there's a downturn in the market, we're going to stand. And I don't know if all these other lenders are going to stand with us and be there. But some of the individuals...
he did say it's like it's not systemic. So it was not. The hell to pay comment was taking it wildly out of context.
Right. The verbal sparring came to there could be Rowan responded to. So Mark Rowan is running Apollo. Rowan responded to Dimon's comments that higher capital requirements for banks had private lenders like Apollo dancing in the streets, meaning Apollo could make loans and do things that the regular banks are too constrained because of capital ratios that they have to maintain. Okay, fine.
Yes.
The back and forth underscores a growing fascination with the nascent private credit sector, which has grown from 2% of the capital that leveraged companies borrowed in 2012 to more than 20%.
That's wild.
As of September 2022, and I'm sure it's grown since then.
Dude,
so,
Dimon is saying if a nickel bag gets sold in Central Park, I want in.
You got to do that more walking like though.
I know.
You got to
go. Do it.
I'll do other. From here on, nothing goes down unless I'm involved. No dope deals. A nickel bag gets sold in the park. I want in.
Yeah. So
you guys got fat. While the rest of them. All right. One other thing. Let's put this Apollo chart up.
Yeah, business is good. Business is really good. It's
Look
really
at this
good.
Beautiful bitch.
It's really good.
All right, this I didn't love. Next one.
Yeah, not great.
AI firm plans private credit fund for servers with NVIDIA chips. See, this is an example. I
don't even know what that means, honestly. I don't even know what that means.
It's a blend of two bubbles. It's a private credit fund that will stand up servers with NVIDIA chips. It's the perfect stock. It's AI or not stock. It's the perfect scam. It's AI and it's private credit. It's everything people want.
Dude, please sell NVIDIA tomorrow. Just you won.
But you know what I mean? Like, what else could we throw into this to make it better? Zendaya? Can Zendaya be the CEO of the private credit fund that buys NVIDIA chips? Like, I'm sure Caitlin Clark can get involved.
If NVIDIA does a commercial with Tom Brady, will that convince you?
Yes. All right.
All right.
NYC is back. Tell me why.
Okay. All right. Let's just run through some charts. So a lot of headlines. Okay. New York City is the most popular. This all came in within the last week. New York City is the most popular destination for class of 2024 applicants, attracting 9% of total applications, up from 8% last year. That's probably the same as it always was. I'm guessing New York's been the top city for a long time. I'm guessing. New York City's tourist fuel record, $4.9 billion in tax revenue. This was a headline from Bloomberg. Look at this chart from Y Charts. New York City payrolls, accounting, tax prep, bookkeeping, right near all-time highs.
Wait,
and
wait,
then
wait, slow down.
I can't. I'm on
people
fire.
working. These are people working in an accounting in New York City.
No.
What am I? You sure? I think that's what it is.
Okay. All right. Fine. But be that as it may, next chart. This is trailing 12-month tax revenue. The whole kit and caboodle.
Yeah.
In New York City.
Yeah.
Does this look like New York City died?
Well, this is just a function of the stock market, my friend. Sorry to tell you that. The stock market dictates. Stock market and real estate dictate employment in New York City.
Well, yeah. Well, how's real estate going? What are you talking about?
Not great. And that's why this is not at the highs from 2021.
What does this have to do with the stock market?
Stock market is like all of the high-paying jobs in New York are related to how the stock market's doing. Investment banking, underwriting, mergers and acquisition, hedge fund shit. It's all related to the stock market. If real estate were better,
all right, whatever.
This
is non sequitur. What you're saying is not even relevant. But my point is that look at this chart. Does this look like a dying chart?
No, it looks good because the stock market's good. It's not in New York City. I think I'm making the point here that New York City collects a ton of taxes right after the stock market goes up a ton. And you actually can see stock market rallies in this chart. Put it back up. You could see where tax revenue falls in 2009, and you could see where tax revenue gets collected like crazy after 2020 and 2021. New York City tax revenue is based on how well the stock market did the year before. So it's good. It's definitely not dying. I agree with you. I agree with your bigger point.
All right, so pitch me Dr. Pepper.
By the way, why are some people in the chat talking about Caitlin Clark? Why do you think they're beating this lady up?
Why are you in the chat? What is wrong with you? We're going to do this every single week?
I don't follow WNBA.
How are you in the chat while you're doing a live channel? It makes no sense.
People are commenting on the New York City chart, but there's a lot of Caitlin chatter because I think I mentioned her.
Listen, I love the chatters, but the chatters are for the chatters. They're not for the person who's on air.
What do you think is going on there? Is that going to stop at some point?
I will defer to the wonderful Kornheiser and Wilbon, who can speak about this issue a lot more eloquently than I can. But they are definitely beating the shit out of her.
Should I watch it though? It sounds like exciting. Like
she's not playing well. It's not like a tournament where she's lining it up. She had one field goal the other night. So she's having a tough time. But no, it's news.
I'm missing all this, but I know people talking about it.
So Keurig was Green Mountain Coffee. Remember that GMCR?
Yeah.
So that was one of the
disappeared into
Green Mountain. No, it was bought by Coca-Cola, I believe. Green Mountain Coffee, and then maybe they split. It wasn't.
Stop. This is my segment. Make the case. KDP is Keurig, Green Mountain, Dr. Pepper. It's a one giant combined company. The merger happened a couple of years back, which I'm going to show you on a chart in a minute. If you look at, let's put up the first chart. So I bought this today. This is a beverage company that got thrown in the garbage with all the GLP-1 stuff going on. And by the way, it also owns Snapple. It owns like 100 other brands. It owns things you don't even think still exist, like Hawaiian Punch. Anyway, stock is breaking above its 200-day. And I think it's probably going to break this 35, 36 area resistance, which I think goes back to maybe quite overbought just yet. Hasn't this longer term chart. So next chart. When Dr. Pepper merged with Keurig, Dr. Pepper Snapple shareholders So the original company is DPS. You with me on that? Hello?
Sorry, I'm in the chat.
Okay. All right, that's fine. The original company was Dr. Pepper Snapple. It merged with Keurig, which itself was already merged with Green Mountain Coffee. So they paid a special cash dividend to shareholders of Dr. Pepper Snapple of $100 a share. And that's why this chart looks so weird. See that? The stock price adjusted for that $100 dividend in July of 2018. So that's a thing that you don't normally see happen very often. Anyway, all that weirdness is now behind the company. They have a new CEO. He's been the COO for a year. This was a planned succession. He took over in April. He had been at Mondelez for 25 years. He ran another public company called Central Garden and Pet. That was a huge growth story. And people are excited again about this company, their potential to fix what's going wrong with the coffee pods. They have some innovation. They have some new brands. They got Black Rifle involved. They got some very popular coffee roasters to create pods with them. And I think with high inflation and the ridiculous prices at Starbucks, people end up defaulting back to K-Cups and coffee pods. And that would play directly into this company's near monopoly on the space. So I think the soft drink business is great. The coffee business has been challenged. If they fix the coffee business, stock breaks out. And that's what I think is happening here on the chart. Are you a buyer? How many shares can I put you down for?
So, first of all, I just wanted to defend my honor. I was right. Coca-Cola owned 16% of Green Mountain Coffee back in the day. They took a monster position.
Okay. What was your point? They don't own it.
My point was you tried to embarrass me, and I was right. Coca-Cola did have a
No,
large
they
stake
don't own it. You're wrong. They don't.
I know they don't own it.
Green.
Okay, sorry. My memory from 2014 was a bit hazy. They had a gigantic position.
So wait, why is that embarrassing? I just said you're wrong.
Don't listen. Rewind the tape. I know what you did. You tried to embarrass me. Fuck off. However, I will say
Coca-Cola doesn't own it. I'm trying to tell you. All right.
Well, I'll go back to the tape.
Okay.
Technically, this chart looks phenomenal. So
yeah, it's going higher.
You're right there.
I think.
Are you buying the stock? Are you buying the stock?
I bought the stock already. I think it's going to go to 40. And then I'll reevaluate. It's a 17 multiple. I think Pepsi is 22. By the way, Dr. Pepper has now unseated Pepsi as the second largest selling soft drink in the United States, which is crazy.
What else does Dr. Pepper make other than Dr. Pepper and Diet Dr. Pepper?
They have this. You mean just Dr. Pepper, or you mean the company itself?
What other soft drinks do they make?
Hawaiian Punch, you like?
I don't. Not four.
Do they do Yoo-Hoo?
That's a good one.
They might do Yoo-Hoo. Hold on, I'll tell you right now. All right. Swiss Miss, Tully's, Krispy. Oh, these are their coffee brands. Krispy Kreme, McCafe, Cinnabon. They have all those as K-Cups. They make Orange Crush, 7-Up, Dr. Pepper, Canada Dry, Sunkist, Snapple, A&W Root Beer. All the shit that's the best shit.
Do you remember
Schweppes, RC Cola, Yoo-Hoo, Nantucket Nectars.
RC Cola, that's, I'm not going to say that's rude. Do you remember Cherry 7-Up?
Yes. They would be the maker of Cherry 7-Up. Dude, Sunkist. How good is Sunkist orange soda?
I haven't seen that in a long time.
All right. Well, they make that. But they also make stuff like Core, which is like a popular water, I feel like. And they have an energy drink. I don't know. Whatever.
All right, now I'm all confused. Now I'm all confused. The Coca-Cola company is the parent company to Dr. Pepper?
No. Who's telling you that?
Wikipedia?
What does it say?
I don't know.
It's not. Stop trying to win arguments with me.
I don't think we'll ever get to the bottom. I don't think we'll ever get to the bottom of it.
You have a mystery chart coming up. If it makes you feel better, you can use it to stump me.
Okay. All right. Chart on, please, John. All right, Smarty Pants. What do you got?
You can't give me something.
All right.
Give me something that's a fraction.
So this is a ratio chart, and this might be the peak. We spoke about one of these companies today.
What time? It's a ratio chart between two companies?
Yes.
Okay, I like that.
It's market caps. It's market caps.
Oh, so it's a valuation
So this is going back 5 years, and as you can see in the beginning, this was 10%. It was 10 cents on the dollar, numerator over denominator. Now it's approaching parity.
So it's got to be two companies in the same sector where one is giant and one is tiny. I'm going to say Uber, Lyft.
Not a bad guess. It's Nvidia and Apple.
Oh, wait, what?
Yeah. So
they're approaching the same. I misheard what you said. So it's 0.95, meaning they're almost at parity.
Yes.
I totally.
John, next chart.
Right, so I'm pretty stupid.
So look at this. So it was a tenth back in
wild
2019. So
Nvidia is like Apple, 6 or 7% of the S&P now.
It's wild. It's too much.
Remember we were playing that game last week? Like, doesn't this sound wrong?
Yeah, this sounds wrong.
This is the one that sounds the most wrong, that Nvidia and Apple are the same. That sounds more wrong to me, actually, than Nvidia and Microsoft. And Microsoft, I think, is bigger than both.
Yeah.
Still.
Yeah, it's whack. It's I'm sorry. It's enough.
I think that if Nvidia is $2.9 trillion, like I'm like doing this like off my head. It's not math, obviously, because it's me. But I'm just saying, like, then Amazon shouldn't be under $2 trillion.
I'm saying.
When I look at the revenue, and the earnings of Amazon, no, but I don't know the actual numbers, but I know that they're close enough.
It's too much.
I know that they're close enough. Yeah. So this being the same size as Apple is just absolutely insane to me. And I own both. I'm not complaining. It just that it sounds wrong. So that's where we are. All right.
Hey,
what did we learn today? We learned about Indian stock market, JP Morgan getting into private credit, which I think makes it no longer private credit. Jensen Huang's walking. I don't know. What else is happening? We learned a lot today, right?
So I think AT&T is the culprit here. I don't want to name names, but that's what I'm seeing in the Slack, that AT&T is having outages. So thank you for sticking with us.
Who uses AT&T? Oh, that's why we got kicked off the thing?
Yeah.
All right, whatever. Hey, everybody. Did you know that tomorrow is Wednesday and you're in for a treat? All new Animal Spirits with Michael and Ben, followed by Ask the Compound on Thursday. There's a very special guest on the show. I don't want to tell you who, but I think you're going to like it. Also want to tell you about an all-new Compound and Friends on Friday. We have special guests on that show. And then, of course, Jill on Money on Saturday, as always. So we have a full slate for you guys. Thank you so much for rocking with us. We will talk to you soon.